A lot of headlines as that shoots well above $70 a share. Do you read froth into some of these market levels here, whether in those individual names or some of the indexes?
You know, a little bit, Kelly. I still don't think it's too bad. I still think you might get a rush into the market, not only year end, but early 2014. You know, much of these gains have been multiple expansions for this year. So if we don't get the corresponding increase in earnings and guidance into the first half of next year, you could see that pull back or the market could get too frothy. But right now, I still think, you know, there's pockets of opportunity, just like when we spoke a year ago, year end. You know, there's still a lot of areas, a lot of stocks that haven't moved that offer great potential.
What do you like here, Alan?
Well, you know, we came out with our favorites for 2014, Kelly, and Denbury, symbols DNR, is a company that has CO2 technology to, you know, enhance the production, the efficiency of oil wells. And I think that's a company that can do exceedingly well. They're going to start paying a dividend. They were looking at doing an MLP, stock's near its lows, and it should yield 3 to 4%. You know, another one is CompuWare. They have like M&A activity as far as passed on an offer at $11. You can still buy that stock around that area. It yields 4.5% while you wait.
Okay.
You know, our best buy pick of last year did really well. Now we got Weight Watchers. Again, it might take 2-3 years. We didn't think, you know, Best Buy would triple or quadruple in a year. But, you know, I think Weight Watchers, if you have a 2-3 year time frame, would be good as well.
Kenny, this 10-year right below 3. If it crosses 3, what happens at that very moment?
Listen, everyone's getting nervous, right? You think there should be some pressure on the market, yet the market doesn't really feel it yet, right? It doesn't really feel like it wants to go lower, although, again, I think that's year end. I think if we break 3 and we start trading a little bit above 3, certainly you'll see a cap on the market until the market's got to readjust. Listen, earnings are coming up in January, so when you start to get that initial kind of look at what the earnings are going to be, is going to give you a much clearer picture on what the next month is going to be, month and a half.
The ratio of 2014 guidance we've gotten hasn't been great.
Well, it hasn't been great, and we've already seen companies starting to scale back on their earnings, yet the market continues to march higher, which is a little bit, you know, disconcerting, I think, for a lot of people. And I think that's why you have to see it play out when it really starts happening in January.
Alan, a lot of this just seems to be people want to buy on the good news, even if the good news is a reiteration of what we kind of already knew about the economy. So that the fact that the 10-year is kissing 3% again today, you're seeing very little focus on it. Actually, it would seem like, because people are almost shrugging it off, saying this isn't a big a deal maybe as it was last time around.
Exactly, Kelly. I think it's a situation where people are going to have losses in their bond portfolio. You know, the munis were down 6-7% on average. And, you know, regular bonds, you know, especially longer term, treasuries are going to show significant losses into the new year if this interest rate trend continues. I think you're going to see fixed income going into stocks. Again, it's kind of like the only place to be. You know, gold has done very poorly. So you could still see this surge, but it could get frothy too. So, you know, I would be taking profits into strength unless you see earnings really doing well as what, you know, it's in the cards right now for stock valuations.
Let me just make one final point, Kelly. Kenny, we are in a kind of never land at the moment where cable TV continues, stock markets are open, but actually there's no one home.
Right.
So whether you hit 3% on the 10-year probably doesn't matter till they get back in the second week in January, and then they react.
And that's the point. That's why I said you can't read too much into it, because volumes are so low and so many people are away, is that, you know, don't get drawn in thinking, oh, it's only up from here. I think that's dangerous.
All right, Alan, Kenny, thank you both. Appreciate it. Have a good one.
Meantime, UPS and FedEx definitely